For debt collectors, there's a season that rivals Black Friday for retailers: tax season. This isn't a small bump. Agencies often see collection rates jump by as much as 40%. The reason? A huge portion of consumers, up to 40%, are already planning to use their refund to pay you. They aren't just waiting. Inbound calls to agencies can spike by 40% as debtors look to settle up. In the next few minutes, we'll break down the strategies, psychology, and the vital legal nuances for this season. First, understand the scale. The average tax refund is over $3,500. This is a significant financial event. This cash influx creates a powerful financial cushion, a window where consumers feel able to resolve old debts. Timing is everything. The peak opportunity is mid-January to mid-May. Your outreach must align with this perfectly. Success doesn't start in February. Top agencies are now updating accounts and segmenting debtors for contact. Preparation is one half of the equation. Communication is the other. The right message at the right time changes everything. The opportunity is clear, and the consumer is often willing. So what does the actual playbook look like? The simplest tactic is often the most effective. Just ask. Train collectors to say, "Expecting a refund? Have you considered using it to resolve this?" This is also the time for flexibility. Limited time settlement discounts give consumers a compelling reason to use their refund with you right now. These strategies work for willing debtors. But for the unwilling, it raises the top question. Can you legally take a debtor's tax refund? Let's be crystal clear. As a private collector, you cannot directly garnish or intercept a federal tax refund. That power is reserved for government agencies. The official mechanism is the Treasury Offset Program, or TOP. It's used for debts like federal taxes or defaulted student loans. Your debt does not qualify, so the front door is closed. You can't intercept the refund on its way to the debtor. But does that mean the money is completely safe? Not exactly. Let's look at a concrete strategy: the debt settlement campaign. This involves offering a limited-time discount for a lump sum payment. And how do you deliver these offers? Stop relying on letters. Digital outreach via email and SMS is more cost-effective and cuts through the noise. Imagine an email. "Hi, John. Expecting a tax refund? Use it to resolve your $1,000 balance for just $600. Offer expires May 15th. Clear and timely. These campaigns will drive calls, so your team must be ready. Training on negotiation and specific tax season offers is mandatory. This all connects back to preparation. You need settlement offers approved and templates built before the season even starts. Now, back to our legal question. We said you can't intercept a refund. But what happens after it's deposited into a bank account? This is the distinction every collector must understand. If you have a court judgment, you can legally levy their bank account. You aren't garnishing the refund, you are levying the bank account. This legal precision is key to effective, compliant collections on post-judgment accounts. This immediately creates two distinct strategies: a negotiation-focused approach for pre-judgment accounts, and a legal, levy-focused one for post-judgment. Knowing this is one thing. Acting on it is another. Is your portfolio segmented by judgment status? Is your legal team prepared to move at the right moment? Let's bring it all together. Remember that 40% of consumers who want to pay with their refund? For them, you use empathetic communication. This is your carrot. For the remainder on post-judgment accounts, the bank levy is your stick. It's the powerful, compliant backstop when negotiation fails. The master strategy is prepare early. Segment by judgment status. Time your campaigns. Use digital channels. Offer carrots and have the legal stick ready. Analytics and business intelligence should guide this entire process. Data tells you who to contact, when to contact them, and which strategy to apply. Tax season is not just a busy period. It's a distinct strategic environment with its own consumer psychology, timeline, and unique legal rules. The single most valuable insight is the line between the prohibited act of garnishing a refund and the permitted act of levying a bank account post-judgment. Your success now depends on your team's readiness. Ensure every collector is trained on these specific strategies and compliance rules before the refunds arrive. The window of opportunity is opening. Begin your strategic planning today to make this your most profitable collection season yet.